"2019 was the year of parliamentary battles. It was all about how MPs would get certain votes over the line, or maybe they'd fail, as we saw several times. After the election, with the Conservative majority in place, Parliament will be less of a market-moving issue. It'll be more about how the UK itself plans to get a free trade agreement across the line with the EU. If you look at the UK, we have slowing growth, we've got inflation below target, and we've now got signs of cracks in the labour market, a slowing down of wage growth, one good example of that. This typically means the Bank of England should be looking to cut interest rates. Growth falling and below trend is a key factor in their decision making. But that's the here and now. Markets trade looking ahead to the future. And we are already seeing signs from UK data and European data of green shoots in the recovery. Central banks are expanding their balance sheets and loosening monetary policy. New orders in the UK PMI and also new orders across European data have started picking up from what were historical lows. This is typically supportive of risk assets, including the pound, and next year could see sterling trade higher. Despite the UK data being weak and below trend today, the global macro economy is improving and the UK is on the cusp of that too.
We're expecting the UK to see stronger growth during the course of 2020. Now, it may not happen that quickly, and it may not go back to levels at which we were used to in the past. Over the last few years, businesses have not been investing as much as we would have expected otherwise, and largely the reason for that has been because of uncertainty surrounding Brexit. We think that Brexit will be concluded by the end of 2020, and if you expect, therefore, uncertainty to dissipate, you see business investment recover and economic growth recover alongside it. I think when you look at global inflation, the UK is now one of those countries where we are below target. We're currently running at a rate of around about 1.5%. We wouldn't be surprised if that falls close to 1%, or at least that's the Bank of England's view. However, in the medium term, we think that growth is going to recover. We think that inflation is going to get back to target, which will require the Bank of England to raise interest rates over a very long period of time at a gradual and limited pace, in their own words. Before they embark on this normalisation of policy, they might feel the need to cut interest rates, just to support the economy and inflation through what might be described as difficult times. So our own forecast for economic growth in the UK is for recovery, and we're also seeing that in Europe too.
Global demand is recovering, and that is likely going to support the euro area manufacturing sector, while the services sector is going to be supported by a tight labour market, loose fiscal policy and accommodative monetary policy. We were already seeing green shoots in euro area growth towards the end of 2019. Indicators are pointing to some recovery in euro area growth. And one indicator in particular, which is an average of the Z-scores of the main surveys within the euro area, is showing signs of bottoming and recovering. Euro area inflation remains still subdued, but there are signs that inflation is improving. We have measures like seasonally adjusted inflation or supercore drifting higher. However, none of the forecasts are showing euro area inflation moving towards the close but below 2% ECB target anytime soon. We don't expect the ECB to deliver any other monetary policy measure. In fact, the ECB might be approaching the reversal rate. That hasn't been the case yet because, as we have seen, lending and borrowing rates in the euro area have been declining following the deposit facility rate. Looking more in detail at the euro area Big Four, we think that France will be the outperformer of 2020. In Germany, the manufacturing recession continues, but we expect growth to slowly recover going into 2020. In Italy, we don't expect elections taking place, while we think that in Spain, the catch-up that the country has experienced might come to an end.